Good morning, Raman, and nice to have you here. And thank you for doing this and being part of Force for Good, interviewing business leaders about the initiatives that they're undertaking in this crucial area. So first, we should do a proper introduction. So I'm John Miller. I'm a director of Force for Good, and happy to be involved in this initiative as one of the education initiatives that we do around what is actually happening in the real world, as we say, and particularly with the financial community and what it can do and what it is doing. And so with that, I'm going to introduce Raman, and Raman is the Global Chief Investment Officer and Executive VP at Great West Lifeco. And so Raman, maybe it'd be great if you just gave people a little bit of a background as to your current job, your current position, and your background overall and how you got there.
Yeah, thank you, John. And good morning, and thanks for doing this, and thanks for having me. Totally agree. This is just a tremendously important initiative. So yes, my name is Raman Srivastava, Chief Investment Officer at Great West Life. Just maybe in terms of, before I get to my background, just in terms of what Great West Life is. So Great West Lifeco is we're an international financial services company. We have interest in life insurance, health insurance, retirement, investment services, asset management. So a lot of opportunities to do good in the world. We operate in North America as well as in Europe. And as you said, my job at Great West is to oversee investments. So I'm the chief investment officer of what we do. If you look across our companies, we have over 2 trillion in assets under administration. So we do feel like we have a fairly strong reach. And effectively, my responsibilities at the company are to help allocate capital in order to best serve our customers. So it's the oversight of our insurance general account assets. It's the oversight of a number of asset management companies that we have. So it's really, how do we invest capital to provide for our customers, but also to affect good. So my background in terms of getting here, number of years in the asset management industry at Putnam Investments, at Mellon Investments in the US, and then ultimately my job here is based out of Toronto, Canada.
Yeah, no, it's quite, obviously quite extensive and important and potentially very influential. And just maybe stepping back for a second, even beyond your company, what do you see as some of the issues facing your sector that you try to address through your investment profile?
I think our sector, like many in the space, are broadly challenged by the macro trends. Where we are heading into a lower growth, higher inflationary, or we're in a higher inflationary environment. So that's just a general challenge for us. Even though rates have risen, I think the general low interest rate environment is generally a challenge for us. And if you marry that against a backdrop of just increased geopolitical risk, more tension, plus the fact that we are trying to advance a number of social and environmental initiatives, there's just a lot. There's a lot when you put that all together and try and do what we do. It is challenging from a macro and micro perspective.
Absolutely, and it puts your organization institution in the middle of all of those issues. So many factors to take into account as you develop your investment philosophy. And would you describe your organization as having values that underpin it as a whole, that you try to implement with the investment portfolio? And
our values, we think are quite aligned, as an organization, and obviously as it pertains to how we invest. We try and do well for our communities, for our customers. We value integrity, honesty, trust is very important in our business and in our company. Inclusion, and really a commitment to the customer. Like, we really think about trying to put the customer first, put our heads in, or put ourselves in their shoes, and really put them at the center of everything we do. So, it's these values that permeate not just the businesses that we operate in across North America and Europe, but also how we act and how we invest.
And so in that context, where you obviously have the responsibility to return certain capital, to reach certain capital hurdles, and return money to your customers, as you say, how do you integrate with that the idea of doing good, doing well by doing good, if you will, into your business?
Well, I think we have a belief that we call sustainability, as a number of participants do, and we think about investing. We think about investing for the long term. But you think about it this way: a lot of the promises we make to our clients You might have a client who you made a promise to for 20 years, 30 years, in some cases 50 or 70 years, and you might have a young child who has insurance. So some of these, we really take a long-term perspective when we're thinking about investments and allocating capital. It's not about the next week or quarter. It's not about day trading. So in that context, when you have a very long horizon, it's critically important that the investments you make are sustainable, that they're going to last over the next, not just 5-10 years, but over the next 20, 30, 40 years. So almost inherently, when we think about investing, we need to make sure that that the investment is sustainable. And now, how can investment be sustainable? Well, it's got to be well governed. It's got to have the right values, we believe, because if not, over time, capital will generally move away from that industry. So we think, we'll talk about, I'm sure, as we go through, but we think it's just very well aligned. When you have a long time frame, when you think about sustainability, you're almost naturally inclined to invest in these companies, because we believe companies that do good and are well governed will be more successful and will be around for longer, and hence that's where we try to direct our assets.
That's a really interesting perspective. Just the idea that if you're thinking long term, you almost naturally have to think about sustainability. It's a corollary of thinking long term. Well, you could get there a number of ways. You could get there philosophically, but I think what you just explained is you get there as I said, as a derivative of a long-term investment strategy. Is that how you think about it?
That's what it is, right? Because if we invest in unsustainable company at the extreme, we would lose. We would lose capital on that investment. And because, like I said, a lot of what we do when we're investing, we're allocating for the long term. We can't afford for that to lose that capital, not even just for the next 5-10 years. If something happens 20 years from now that affects the viability of this investment, that matters today. So we need to think about this, not just what might be the environment we're living in over the next 5 years. We need to think about 5, 10, 20, 30 years from now. So yeah, it's crucial for us, given our industry and what we do.
Again, that's really interesting, and puts a kind of juxtaposition from at the most extreme, a day trader kind of mentality.
It's the opposite. It's kind of the opposite of a day trader. Yeah.
Yeah, and they're probably that it doesn't naturally mean that they get to sustainability. And as you think about not in addition to broad sustainability, when you do you think about it in terms of specific areas that you want to try to focus on, again within the hurdles you have to achieve financially, such as climate change or perhaps others?
Well, I think it's, you raise a really good point. A lot of the challenge here is, you want to do good, but first and foremost, you have to have a good return on capital. So those two have to intersect. So it can't just be about philanthropy. It's got to be, looking for investments that provide a strong return on capital. We will, have separate initiatives where we are philanthropic and allocate capital that way. But for what we do for our investments, it's got to combine the two, and it's got to be attractive from a return on investment. Now, that said, there are a number of areas where you can find the marriage of both. So, a good example for us would be we provide a lot of financing in renewable energy. It fits us really well. It's you're financing projects such as a solar farm or a wind farm or something like that, and the cash flows are very long. The returns on capital can be very good compared to other investments, and the reason is they're more complex, they're less liquid, so it takes more time to analyze them. But on the same time, you're investing in something that is, or we believe to be sustainable, because we believe there's going to be more and more demand, more and more capital as the industry and as the world, quite frankly, aligns around the concept of reducing greenhouse gas emissions. It's just going to naturally flow more capital to renewables. So when we think about making this an investment for 20, 30, 40 years, we have that as our thesis, that we believe there will be demand for this over the next 20, 30, 40 years. And in fact, that demand will be increasing, not decreasing. So there are examples, and we do, we've done over $5 billion in that sort of lending, just in that one area of renewable energy.
That's really interesting. And if you don't mind me asking, don't give away any trade secrets, but how do you source those opportunities? Do they typically find you? Do you actively reach out? What is the process there?
Right. So we have a large investment team, and it's a bit of a combination of both. It's a bit of a combination of us just knowing the industry, the players in the market. It's also a combination of sometimes they'll come to us via participants in the financial services sector. It could be the government in some cases where there's opportunities. So it's a bit of a combination of both, us searching out for where we can provide this financing, but also opportunities that come to us.
And returning to this idea of long-term investing naturally arrives at some level of attention to sustainability. Is that something that you find that your organization as a whole understands, has understood? Are you having to pull the organization in a certain direction, or is this something that's well understood given the investment horizon that you look at? Because one of the things we're always interested in is what does it take to get organizations to feel this is part of their mandate?
Yeah, it's a really interesting question, and so I think of it this way: we have a number of companies. One of them is Canada Life, and just to give you an example of how I think about this and how it permeates around the organization. So Canada Life has actually been in business longer than the country of Canada. So so this year we'll be celebrating our 175th anniversary. So if you think about what's happened over the past 175 years. That pandemic, you've had wars, you've had a number of challenges. So we think about it as, okay, not just, don't get me wrong, we do focus on short-term results, but really it's what are we going to do for the next 25, next 50, next 175 years? So that's almost embedded in the philosophy and the thinking of people that work at our company. I'd say probably more so relative to other companies in the industry. So that's helpful because from a background, you already have that sort of mentality. The challenge I think now is, and where the push really is now, in my mind, is the quantification and the making a lot of this more tangible. Because you can say that and you can describe these things in broad terms, but really now what our focus is and where the push really is how do you make them tangible? So how do you put metrics around what you're trying to do from an inclusion perspective? How do you put data and metrics around what you're trying to do from an environmental perspective, from a social perspective? So I think that's where now we're moving, and that's where it is. It's taking more time and effort because the data can be challenging, and we just want to make sure we capture and measure everything appropriately.
Yeah, that's really interesting. Something that we think and talk to folks a lot about as well is how do you make these things concrete and hopefully show that not only the expected returns there, but maybe even a little bit better than that if you have this kind of investment philosophy. And so when you do it, do you focus primarily on your own measurements and metrics, or are there any industry standards that you gravitate towards?
It's a bit of both. So when we, so another example I'll give you is on the real estate side, where on the real estate side we invest a lot in properties, and there we'll measure it ourselves. We'll use third-party data. When it comes to, say for example, underwriting the investments we do in the equity and in bond markets, same thing. It's a combination of our own views on the whether it be environmental or social or governance aspects of an investment. But we'll also rely as best we can on third-party data. It's been, I'd say the whole industry is faced with this challenge on the data side, where we're still moving towards, I'd say something that's standardized across the industry. But it feels to me that the past, I'd say 2 years, you've seen a really strong acceleration in trying to get the bugs, if you will, worked out of the data. So we're not there yet, but I actually think that's one of the biggest challenges, and maybe the most crucial, because in my mind, unless you can accurately measure it, so if you have these inconsistencies in the data, it's going to be really hard to push this agenda forward. So there's great progress being made there. I'm optimistic on it, but we use that as much as we do our own internal data.
Yeah, that is one of the things that we think about it and hopefully can be actors in at Force for Good, is to help some of the standardization in measurement in various capacities, particularly oriented for the financial industries. Because I do think it's if there's a common language around this and common data, and we're not debating at least that set of facts, that would probably be very helpful to all. At least we hope that to be the case.
Yeah, absolutely. I think, so when I, interact with, my peers across the industry, that's one theme that I think resonates everywhere. The other is with respect to disclosure and regulation. So I think that's another area where when we interact with our, respective government bodies across our various jurisdictions, what we're trying to do, because we do operate in different regions, in Europe or in Canada or the US, we really would like to see as much as possible coordination across regulators as well. So you have consistent asks. So it just makes it easier to compare. We're encouraged by what's happening in the accounting area under IFRS with the new, internet sustainability standards board that's being enacted to try and provide some consistency. So that's, I think, also a theme that resonates across the industry. You want consistency in data, you want accuracy, obviously, but you also want as much coordination and consistency as you can with respect to regulation, because this is a big ask. And you're thinking, we're a large organization, but they're smaller organizations. And for this to work, you need everyone to come along. So, it can get really expensive and really challenging if you have a number of different competing regulatory requirements. So I think this is another important imperative, is to just be collaborative when it comes to both of these things.
Actually, yeah, that's a really interesting point. You're a significant enough institution that you can do, as you said, some of your own metrics, some of your own research, etc. There are many that may not be able to, and what can they rely on if they want to, pursue and see the efficacy of their initiatives in this regard? So that's an excellent point. Broadening the need for these kind of standardization of metrics and so on.
Yeah, it makes it easier, I think, for everyone.
Yeah, and obviously one of the main things that at Force for Good that we're focused on is getting, as in this discussion, getting the institutions or helping institutions and highlighting institutions that are doing this, some of this kind of sustainable investing, and obviously trying to move the needle in that regard. But we don't want to discount in any way. I think you mentioned you do also some philanthropic activities. I don't know if there's anything you could mention about that, because obviously that would be important as well to highlight.
It's a long list. So I think, we operate, like I said, across a number of jurisdictions. So what we try and do is really impact the communities which we serve. We're just as strong as the communities around us and what we serve. So we'll do a number of, like you said, philanthropic or charitable activities across it. There's too many to really highlight. But I guess it is something, when we think about our mandate, our mission, our mission really, we describe it this way. We say it's the purpose of our company really is to improve the financial, physical, and mental well-being of the customers that we serve. So that's very simply, that's what it is at the high level. So we think most of the way we do that is via the products and services that we offer to our customers. But in addition, we want to directly support the communities in which we operate. So it could be, something as simple as funding a local charity. It could be, something as sponsoring a local sports team. Whatever it is, we try and serve the communities in which we.
That's terrific. So it's, what I hear there is it's not just the very high level, large scale, let's call it corporate initiatives, but you push them also down to the community level as well, and try to have an impact at the local level. And would you say in your organization that's well understood? What you just described, everyone understands as a high level mission of the company to do that, again, achieving the financial hurdles that need to be achieved.
We try to describe it that way. We have over 25,000 people that work in the company, so it's I'd say it's broadly understood, but it's important for us to keep the message, not even just for ourselves, but also to just externally as well. So internally and externally to make sure it's well understood. This is what we do. So it's something we're working on, right, in terms of how best to really consolidate what we do. Because if you think about it, ours, like many large financial institutions, it's quite complex. There's a number of different jurisdictions, a number of different products. There's a number of things we do. So how do you distill it down into a few themes or a few concepts that are clear? So I think there's an understanding of that. I think we can continue to work on describing that, again, not just internally but externally.
So maybe just to wrap up, there's one thing we discussed around metrics, that would be helpful for the industry. Is there anything else you might point folks to as to what would be helpful for your industry or might move your industry even more so towards these kind of, I'll call it sustainable investing program that you have?
Well, I'd say, I mean, quite frankly, things like this, I think just being able to hear from participants, I know when I listen to others in the industry speak, I always pick up something. So I think, being able to continue to collaborate, I mean, this is a big problem that we're trying to deal with. And I know we find it quite challenging. I'm sure a lot of people find it quite challenging. So, and it's moving so quickly, right? There could be something that, 6 months ago wasn't all that relevant, and all of a sudden it's very relevant. So I think, for us, being able to have these forums where we can hear from each other in a constructive way, where we can collaborate and get creative around some of these solutions, I think there is a real push. We talked about it before. These investments that we make, they have to be viable. So, to the extent that you can have public and private ways, and again, be creative and be thoughtful about how to make these investments more attractive from a return perspective, and at the same time benefit the planet. I mean, these are high level things that we're saying, but there's actually some micro details that can be achieved. So I think the industry just got to continue to act with a sense of urgency, recognizing how little time we have and how important this is that we get this right. So I like to just continue to see that happening, because I think it's critically important.
Well, thank you for that. And you said a number of things interesting there. One that I latched onto as you were saying it was that, in so many words, what I heard was if the recipients, if you will, the people who might be in a case, creating the solar energy company, if they had in mind the financial hurdles that the investors need to hit, and we're very mindful that that might unlock a lot of further investment if that was on the table from the start, as opposed to assuming that just by having a good solar energy program that will get an investment. So
yeah, it's that, and even just having the dialogue, right? So we can say, well, let's look at our investment activity over the past 1, 5, 2, 3, 4 years, and let's see where it's been directed. And then you might look back and say, well, okay, well, if we let's work backwards. Let's say we wanted to take, instead of investing in $5 billion worth of financing, we wanted to do for renewable energy. Imagine, we wanted that number over the past few years to be 50. I'm just throwing out numbers, right? Now let's reverse it. So what would have had to happen for us to have 15? Now, for the next 5 years, how can we work with, maybe it's, maybe there's a capital incentive, maybe there's a tax incentive, like there might be ways to work creatively and figure out how to make these investments more attractive so that we can fund, ideas, technological advances in order to really accelerate the pace. So again, it's simply said, it's the devil's, like everything, is always in the detail. But I think the more we can really have these conversations and think creatively, I think we can get there. It's just it's a big ask.
No, and I think you've laid out a terrific challenge for kind of both sides of the table, if you will, on that. Is if we have goals of achieving, well, meaningful results for the planet, but even beyond that, certain specific financial investment goals on the path to achieving those results for the planet, what are the conditions that will have to be in place for that to actually occur?
Correct. And we see examples today. So I think the good news is there's a lot to build off of. We see partnerships between the public and private sector, which can really accelerate capital flow to desired areas. So I think there's some frameworks that we can build off of today that we've seen either in certain countries like Canada or other areas that might, we might be able to use in emerging markets or other things. So it could be development finance, it could be, public-private partnerships. So there's ways to really advance this, and I just think we need to do more and more of it.
Well, Raman, thank you so much for spending the time with us and for giving us all that homework to do.
We all have a lot of homework to do.
Yeah, homework we can all share in, but a terrific challenge that you've laid out for really all of us in this regard, to put in place true accelerators to the investment and sustainability, which is obviously needed, but again, the conditions have to be created such that can really happen. And so thank you for everything you're doing, and thank you for doing the interview again with us today. and hope to speak to you again soon. And
Yeah,
take
thank you,
care
John.
and thanks again. Yeah, bye-bye.
Thank you. Bye.